Assalamualaikum. My name is AMSYAR.
My name is Muhammad Akil.
Assalamualaikum. My name is Muhammad DANISH.
Assalamualaikum, and my name is DANISH HAZIQ. Alright, first and foremost, we ask the owner about the background of the business. This business is run by a young gentleman named Dandy. The toy shop was started mainly because Dandy noticed many parents were looking for affordable and safe toys for their children. Instead of buying online, some customers prefer to see and touch the toys directly before make a purchase. This business is operated as a sole proprietorship, meaning that Dandy manages everything independently from purchasing stocks, handling customers, recording transactions, and organizing the shops. The shop sells a variety of toys including action figures, dolls, educational toys, puzzles, cars, soft toys, and also seasonal toys. Furthermore, the target customers are mainly from parents, children, gift buyers, and especially toys collector. The shop is located in the middle of town in Malacca at Taman Malacca Raya. Dandy started his business with a capital worth Rm 30,000. Overall, we can see that this business started with a simple goal, which is to provide affordable and a good quality toys for the community. Thank you.
Hello and a very good day to those who are watching this video right now. I will be continuing our presentation about the business chose for our accounting assignment, which is Ganamania, and the owner goes by the name Dandy. As you have been informed, Ganamania is a sole proprietorship type of business. Number 1 is sole proprietorship. A sole proprietorship is the simplest and most common form of business structure in Malaysia, ideal for its small-scale operation or individual entrepreneurs. It is owned and operated by a single person known as the sole proprietor, in this case, the owner, Dandy. There is no legal separation between the owner and the businesses. The owner has full control, receives all the profits, and bears all the responsibilities. This structure is governed by the Registration of Businesses Act in 1956 and registered with the Companies Commission of Malaysia, SSM. It offers ease of setup and minimal compliance, but comes with a personal risk. Even though sole proprietorship is easy to manage and flexible for the owner to handle all by himself, every pros has their own cons. Number 2 is capital and business ownership. In a sole proprietorship, the initial capital is provided entirely by the owner from personal funds, savings, loan, or assets. For these businesses, the capital is 30,000, fully contributed by the sole proprietor. Ownership is exclusively held by the manager alone, Dandy with no sharing of equity or involvement of partners or shareholders. This means Dandy retains 100% ownership, enjoy all the profits, and can make decisions without consultation. However, raising additional capital is limited to personal resources or bank loans, as there is no option to issue shares or attract investors like in a company structure. On number 3, management and control. The sole proprietorship is managed and controlled fully by the owner himself, Dandy. As the role decision maker, Dandy handles all aspects of the business, including daily operation, strategy planning, hiring, if any, and financial management. There is no board of directors, partners, or external oversight required. This provides complete autonomy and flexibility, allowing quick response to market changes. However, it also means the business relies heavily on Dandy's availability, expertise, and effort, with no separation between the ownership and management. Number 4, liability for sole proprietorship. In a sole proprietorship, the owner has unlimited personal liability. This means Dandy is fully and personally responsible for all debts, obligations, losses, and legal issues of the business. If the business incurs debt or faces lawsuit that cannot be settled with business's asset, creditors can claim against Dandy's personal assets such as savings, property, or even vehicles. There is no legal protection separating personal and business finances. This is a key risk compared to limited liability structure like companies SD and BHD, where personal assets are generally protected. And last but not least, books of accounts. Books of account refers to the systematic recording and maintenance of all financial transactions of the business. For a sole proprietorship, this involves keeping accurate record of income, expenses, assets, liabilities, receipts, invoice, profit and loss statements, and even balance sheet. This must be retained for at least 7 years for tax compliance and potential audits by the Inland Revenue Board, aka LHDN. While sole proprietorship in Malaysia are not required to prepare audited financial statement, unlike companies, proper bookkeeping is essential for personal tax filing, VIA Form B, claiming deduction, tracking performance, and supporting loan applications. Simple tools like spreadsheets or basic accounting software can be used, ensuring transparency and ease during tax assessment.
I want to talk about the classifications of business items. There are several classifications of business items involved in the daily operations of Gandamania by Delhi. Even though this business operates on a small scale, it still applies fundamental accounting principles to ensure that all business activities are properly managed and recorded. Classifying business items correctly helps the owner understand their financial position and performance of the business. Firstly, the business involves assets. Assets are resources owned by a person or a business that are expected to generate future economic benefits. In accounting, assets are generally classified into current assets and non-current assets, depending on how long the assets are expected to be used or converted into cash. For current assets, Gandamania by Delhi mainly owns inventory, which consists of items that are held for sales to customers. These inventories are considered current assets because they are expected to be sold within a short period, usually within 1 year. Examples of inventory sold by this business include blind boxes, vendor model kits, and trading card cables. Inventory plays an important role because it is the main source of the revenue for the business. Once these items are sold, they are converted into cash, which can then be used to support each other business activities. Apart from inventory, the business also owns non-current assets. Non-current assets are long-term assets that are used to support business operations and are not intended for resale. In Gandamania by Delhi, example of non-current assets include a personal computer that is used to record sales transactions, manage inventory information, and keep track of financial information. In addition, the business owns 24 display racks and shelves, which are used to organize and display products neatly, making the store more attractive to customers. Other non-current assets include storage box for inventory storage and payment device, which help to speed up the payment process and improve customer convenience. These non-current assets help increase operational efficiency and improve customer satisfaction in the long run. The business also has liabilities. Liabilities refer to the financial obligation or debts that the business must settle in the future. Gandamania by Delhi mentioned that inventory is sometimes purchased on credit from suppliers. This situation creates accounts payable, which is classified as a current liability because the payment is usually required within a short period of time. Accounts payable allows the business to continue operating smoothly, even when immediate cash is not available, helping the business manage its cash flow more effectively. Another important classification is honest equity. Honest equity represents the owner's claim on the business after deducting liabilities from assets. It includes the capital contributed by the owner to start and operate the business. In this case, Mr. Dandy as the owner contribute 30,000 ringgit in cash to support the daily operations of Gandamania by Dandy. Furthermore, he also contributed his personal vehicle worth 65,000 into the business. This vehicle is used to provide cash on delivery services, especially for customers who do not have the time to pick up their purchase. These contributions strengthen the financial position of the business and reflect the owner's commitment to business growth. In addition, revenue is a key business factor for Gandamania by Delhi. Revenue refers to the income earned from the main activities of the business. In this case, revenue is generated when the business successfully sells toys such as vendor model kits, blind boxes, and trading card games to customers. Higher sales directly increase revenue and contribute to the overall profitability of the business. Revenue is important because it determines the ability of the business to cover expenses and sustain long-term operations. Lastly, The business also incurs expenses which are costs involved in running the business on a daily basis. For example, the Damania by Dandy offers free gift promotion to customers who spend more than 100 ringgit. This promotion is considered a marketing expense as it used to attract customers and encourage high sales. Additionally, the business needs to pay for electricity expenses, especially because it operates 3 air conditioners to ensure a comfortable shopping environment for customers. These expenses are necessary to maintain smooth operation even though they reduce the net profit of the business. Conclusion is the Damania by Dandy involves several important classifications of business items, including assets, liabilities, owners' equities, revenue, and expense. Each classification plays a crucial role in helping the business operate efficiently, and maintain financial stability. Proper classification allows the owner to better understand the business financial position and make informed decisions for future growth. Thank you.
Hello, good morning. So my name is Muhammad AQIL bin SUHAIMI. So I will talk about recording process of the business. Okay, for the recording process of the business, so the owner use a point of sale or a post system as the main accounting tool. All sales transactions are recorded automatically through the post system at the time of purchase. When a customer buys a toys such as a gundam, so the systems records the sale amount and updates the inventory level immediately. So the post systems also record cash inflow and outflow, allowing the owner to monitor daily sales and cash balance easily. Instead of using physical invoice, the business store transaction records digitally in the system and online platform. However, the business does not fully follow the complete accounting cycle. Proper accounting journals, ledger, trial balance, and adjusted entries are not formally prepared. So the owner mainly relies on the post system for daily operation rather than preparing detailed accounting records. So therefore, we can say that the recording process is efficient for operational process, but limited for formal financial reporting. Talk about strengths. One of the main strength of the recording process is that the post system is easy to use and user-friendly. So the owner does not require advanced accounting knowledge to operate the system, which make it suitable for small businesses. In addition, the post systems record transaction automatically, which help to reduce human error and save time. Sales, inventory, label, and cash movement are updated in real time, allowing the owner to monitor business performance more efficiently and more better. Another strength is that all records are stored digitally. This reduces the need for a physical paperwork and make it easier to retrieve transaction information and when needed. So overall, the post system improve efficiency and accuracy in daily business operation. Then I will talk about weaknesses of the recording process. So despite its advantages, the recording process also has several weaknesses. One major weakness is that the business does not maintain a proper accounting journals and ledger, which are important for preparing financial statements. Additionally, trial balance and adjusted entries are not prepared, which limits the reliability of the financial information produced by the system. This makes it difficult to evaluate the overall financial position of its business. The post systems may also experience technical issues such as system bugs or software updates. which could temporarily disrupt the recording process. Furthermore, the business depend heavily on the system, which means that any system failure could affect the record keeping. Therefore, we can say that while the post system is convenient, it is not sufficient for complete accounting and financial reporting purpose.